all, welcome you back to Caroline's Online Academy in the series of videos in which we're learning various concepts involved in accounting for share capital. I have a question here for you related to in which pro rata allotment has been made, but this question is slightly different from the various pro rata allotment questions that we were doing earlier. In the sense, in this question, there is pro rata allotment as well as rejection of shares. That is, the company has received a certain number of applications and it has not completely made pro rata allotment on all the applications. So it has rejected certain applications and made pro rata allotment to the remaining applicants. So we'll learn how to solve this problem in this video. We go ahead and read the question. Mitra Limited issued 1 lakh shares of ₹100 each, payable as follows. Application ₹25, allotment 30, first call 30, and second call is remaining. So second call will be how much, my dear children? The issue price of the share is 100. Along with the application, we received 25 and allotment 30 and first call 30. So 85 has been received on the earlier calls, and therefore second call money will be 15. The company received 1,40,000 applications. The company rejected 20,000 applications and made pro rata allotment of 1 lakh shares to the remaining. Understood or not, actually? So the company rejected 20,000 application of the 1,40,000. So there is outright rejection of 20,000 applications, and to the remaining applicants of 1,20,000 shares, they have made pro rata allotment of 1 lakh shares. Understood or not, my children? So let me teach you how to go ahead and solve this one. It's very simple. Bank account debit to share application is the first journal entry, as you all very well know. The transaction being receiving application money. So bank account debit to share application account. Application money received. And the amount is what, my dear children? The total number of applications received, which is 1,40,000 multiplied by 25. The application money per share that is receivable. And in all pro rata allotment questions, the second journal entry is the most important. And we always start that journal entry by debiting share application account with the full amount that we credited the first journal entry, which is 35 lakhs. And then we credit share capital with the application money received per share multiplied by the number of shares allotted. We allotted 1 lakh shares, and that will be multiplied with 25 rupees, which is application money receivable on one share, and that will be 25 lakhs. Now, usually we take the remaining two share allotment account. If all 1,40,000 applications have been made, have gone through pro rata allotment, and 1 lakh shares have been allotted to the 1,40,000 applicants on pro rata basis, we can take the remaining excess application money to share allotment account or calls in advance as the question instructs us to. The question is silent, and we have to take it to share allotment account, and if there is any excess over and above share allotment account, we got to refund that. But in this question, my dear children, 20,000 applications have been rejected. Am I right or not? No pro rata allotment has been made on them. They have been outright rejected. Those people are not going to be shareholders of this company anymore. If you're rejecting applications outright, then what are we supposed to do? We got to refund the application money on the 20,000 applications. And therefore, in the refunding amount, bank account reduces. Bank is an asset and it decreases. You got to credit it. So bank account will be credited with 20,000 into 25. That is the number of applications rejected multiplied by the application money received on those rejected applications. So that will be 5 lakh. The remaining is what, my dear children, is the excess application money that is available to the company. And that happens to be how much? 35 lakhs minus 25 lakhs minus 5 lakhs, which is 5 lakh. Understood or not, my dear children? Shares allotted. Now, third journal entry would be to make allotment money due, the share allotment account debit to share capital. Irrespective of the excess application money available, we make the allotment money due on all the shares. Allotment money happened to be 30 rupees per share. On 1 lakh shares, it is 1 lakh into 30, so that is 30 lakhs. And then we go to receive the allotment money, and that is also easy as we don't have any calls in arrears or calls in advance in this question. The journal entry for receiving allotment money is bank account debit to share allotment account, allotment money received, sorry, and that will be how much, my dear children? It's the amount that we made due minus any excess application money that was available, which happened to be 5 lakh in this question. So 30 lakh minus 5 lakh is 25 lakhs. That is the allotment money that we'll be receiving. And then we go ahead and make the first call due. And the journal entry for making first call due is share first call account debit to share capital account. These are the usual entries. There's nothing complicated here. Share first call made due. Make it due for the entire 1 lakh shares. First call amount was 30, and therefore it will be 1 lakh into 30, which is 30 lakh. And then we have to receive the first call money. There is no advance available against it, so we'll receive the entire amount that we made due, as there is no calls in arrears also. So bank account debit to share first call, share first call money, and that will be how much money and the entire amount that we made due, as there is no advance calls in arrears. And then we make share second call due and receive share second call money, and with that the problem gets over. And share second call is how much, my dear children? It's 15 rupees per share. Am I right? Share second call account to share capital account, share second call made due. The amount will be 15 lakhs. And likewise, while receiving it will be bank account debit to share second call account, share second call. All right. So with that, we have come to the end of this problem, my dear children. The only thing that we learned new in this question is, in case there is not complete prorate allotment, if there is some rejection along with prorate allotment, then what we got to do is, whatever amount of money we have rejected shall be credited to bank account. Whatever amount of money received on the rejected applications are, that will be credited to bank account, because that amount has to be refunded to the applicants. So in this case, we have rejected 20,000 applications. So 20,000 into 25 rupees per application we received, that will be credited to bank account, and 5 lakh is therefore credited to bank account. The remaining is excess application money available on the 1,20,000 applicants who got 1 lakh shares, and that, as usual, will be taken to share allotment. Understood or not, my dear children? So with that, we have come to the end of this video. I'll meet you again with another video in which we'll deal with rejection, full allotment, and prorate allotment. That is the same question. When you have received a certain number of applications, for certain applications we have made full allotment. For some applications we have rejected them and allotted 0 shares. That is, for certain other applications we have made prorate allotment. So how to go about accounting for that is what we'll learn in the next video. You people have fun, like, share, subscribe, comment if you like the content that we are doing, and stay in touch. Bye.